today's report, we're going to talk about two main things. And the good thing about this is it's right in the wheelhouse of the Federal Reserve. What the Federal Reserve has two mandates. It's maximum jobs stability, aka jobs, aka inflation. So today's report, we have initial jobless claims that came in the Federal Reserve's wheelhouse, as well as the producer price index, the PPI. That's the one inflationary number that the Federal Reserve puts the most weight in. So those are we're going to discuss right after we go over rates. But we do this channel, my whole focus of the channel is and goal is to educate and inform you guys everything real estate, especially when it comes to your financing options. It's not only about rate, guys, it's about who you deal with, the programs, and just making sure you have the right product and the right team behind you. So let's get to it. First thing we're going to start off with is our economic calendar. So we have initial jobless claims coming in at 203,000. The expectations were for 195. The previous number was 202. So I'm not reading really much into that. I'm going to say that's steady. You know, that's not a big enough move in any direction for me to have any concern here. The producer price index, look, last month, 1.6. The forecast was per 0.5. It came in at 0.5. So are we starting to see a decline at these numbers? That's what we're going to dig into. But let's first start out with why you're here, mortgage rates. So where are mortgage rates opening the day? Here they are. So no factors have been involved yet in this. Basically, this is where we closed last night. No lenders have posted their rate sheets yet. It's too early in the morning. So Mortgage News Daily, that's who puts this report together. They do surveys all over the country to figure out where mortgage rates are. So these are the national averages. This is not one individual lender's or specific rate. So to find out your rate, I'm going to give you my information at the end of this video on how we can search the whole country with over 130 lenders to assure you guys that you're getting the best program, the best rate, and the best fee structure. So let's go over this. Here's how you read this report. Right through here, we see the first cell. It's more the 30-year fixed. It came in, it's actually coming in or closed the day up only 1 basis point. It's unheard of in these days. Every day we usually see an 1/8 to 1/4 move. So I'll take the stability in this. So we have right now the 30-year fix is coming in at 5.41, up only 0.01%. It comes in with a cost. How do you figure out the cost? Well, pretty simple. I'll put the calculation on the screen, but here's how you do it. Let's just change this word of points into percentage. So what you do is you take your loan amount, let's say in this example, it's 100,000, times what you'll do is hit 0.4, the percentage sign, and equal. And that's how much it would cost you to get this rate on a national average. So remember that. This is basically a fictitious rate at this time. The 15-year, let's go over to the 15-year. It's also coming in with a cost. That's what we want to make sure you guys are aware of. Not only what the rates are, what the costs are. So the 15-year fix is coming in 4.78 flat, no movements. I'll take it. For some reason, the government programs, FHA, VA, and USDA, are going up. It's up a quarter, or I'm sorry, it's up an 1/8, coming in at 5.12. But the thing there is there's no points there. There's no points on the jumbos either, which is coming in at 4.6, down 2 basis points. And then we have the 5/1 ARM coming in at 4.57. It comes in with 1 point, okay? And you calculate it the same way as we did the other. But remember when I said you change the point to percentage? What you would do is just hit 1 and then hit percent. Okay, so that's where we go. It is down 3 basis points. Look at the trend down here, the 10-year trend. We're at the highest levels that we've seen in the last 10 years. But the nice news is right here, we have a moderately strong trend right now for the MBS markets, which is good. And I'm going to go over the MBS markets right now. So what's the MBS markets doing? Well, first of all, what is it? Okay, I'll make it as simple as I can because I have a lot of returning visitors that I don't want to keep repeating myself every day. So what creates a mortgage rate? Well, there's a yield on something, right? And it's the yield on this thing. This is a bond that trades on Wall Street. Okay, so what we monitor here is right here. What's going on with the price of the bond? Okay, that's what we're going to follow. Why? Well, it's easier to determine that. And when we see the price here, such as in this case, going up, when you pay more for a bond, it drives down the yield. So there's they call it an inverse relationship. When this number goes up, yields go down. When this number goes down, yields go up. As you can see from the chart below, the 1-year chart, We've been in basically half the year, we've been on a consistent decline. Okay, so that's that for mortgage rates. So if you want to check out the news and what's affecting these for today, the next week, and the future, stay tuned. That's what we're going to go over right now. So here's a market newsletter that I just published out there, and I just shared it. So if you want to find out how to subscribe to this, you can go down the description below or go to our website and you can sign up there as well. But it says bonds are bouncing back despite hotter inflation numbers. Hey, feel free to call the comeback, but don't ask what's happening. So basically, really, a lot of people who are following all this data, it's a conundrum right now because one day we're way up, the next day we're way down, and it's very sporadic. But if you called this one, you either were a permanent bull, as they say here, or you were just lucky. So it's not just me. We have basically economists all over the country that are just stumped by all this. But the good news is with some of the data that we're going to go over next with the PPI, you're going to see that there is also perhaps some case to be made that CPI wasn't that bad concerning the big drop in monthly headline inflations. So we're starting to see, I think, a peak, and we're starting to go down, starting to decline on a lot of the inflation numbers. So we have the headlines right here. Wholesale inflation rose 11% in April as producer prices keep accelerating. It's an eye catcher, but they don't really dig down into the details to tell you what's what. It's good clickbait, it's good news, and it brings a lot of people in. But here we try to dissect everything to explain why all this is happening. So producer price index at a wholesale level rose 11% over the year and 0.5% in April, along with from the stats that we got from the Labor Department. I'm going to show you that form actually next. Weekly jobless claims were little changed, but continued claims fell to the lowest level since 1970. So we're having the job market is stable, we'll put it that way. So the biggest focus we're going to focus in on right now is the inflation numbers. We go down through here, gas and prices have been responsible for much of the inflation surge, with indexes tracking the two sectors, respectively up 1.7 and 1.5 in April, according to the PPI. Auto prices, particularly for the used cars, also have been a major inflation gouge. Okay, so that's what we're seeing right here. So let's go over what's in the producer price index and why do we follow it. Okay, so there's a consumer price index and there's the producer price index. And this is where a lot of people just get thrown off. The producer price index is basically how much producers are raising their prices. Okay, so then we have the producers and then we have the consumer price index. All right, so let me just explain this piece of it. A lot of times people are saying, well, a lot of these companies are gouging us. Well, this is where we follow this trend. The producer price index, how much is producers actually raising their prices? So if they're raising them, say 5%, but then you see the consumer price index going up 8%, that means there's a spread there. See the 3% spread? That means maybe we are getting gouged a little bit. But in a lot of these figures, you'll see producer price index basically was up higher than the consumer price index, meaning a lot of the companies are starting to reduce their profit margins. Thus, we're going to see stocks coming down. Thus, people are starting to feel a little bit more concerned about their finances. I am in particular as well. So let's go through this data just to see what trends we can start to follow. So you have here, this is basically, it comes out and a lot of people says, Dan, you pull a lot of old data. Well, I can't really do much better than this one. This is basically within the last, I'll say 2 hours. Okay, so that's the definition of the producer price index, how much producers are increasing their prices. Well, let's go down through and see where some trends are. And we did this yesterday with the consumer price index to see, are things still escalating or are they coming back down? So let's just compare it to last month's. So here's last month's data. Let's just start at the right. And I won't go into each individual cell, but let's just go down through here and see, really what the numbers are. We're going to go to food. Previous number in March, it was up 2.5%, looking at 1.5%. So it's down, but it's down almost half. Okay, so that's a good number. Energy, 6.4 to 1.7. Well, the unfortunate piece is right now we just had another major spike in gas prices. So this is going to go up. This is an area where I think the government does need to get involved with the energy sector. And I'll leave it at that. Over here, transportation, but if you look at this number, we were at 11.5 previously, 11. 0.3 minus 0.1. 5.7, 3.6. The trend is going down. That's what I like, what's going on. Okay, so that is the economic calendar for today. We just discussed two of the main areas that the Federal Reserve monitors: jobs, which is coming in steady right now, and the inflation numbers, which some of these numbers I'm liking. Okay, I'm predicting a peak right now, and things starting to ease as we go forward. So that's my report for today. Sorry, I'm a little bit dark in the background. I'm trying to get my lighting right. I have my studio getting worked on as we speak. But if you're out there and say, hey, Dan, I like your videos, well, what do you do? Okay, I'm a mortgage advisor. Okay, I help clients all over the country. This is what we do. We scan the country. What we do is we work with you and we scan the country on your behalf. We view over 130 different lenders to see where are the rates out there. Like in your case, you call me, you call another place, you call another place, you call another place. We all give you what the rate is right at that snapshot in time, but you don't want everybody pulling your credit and doing this and doing that. You want to just, dissect this market and then go with somebody and use it. Okay, don't continue to keep calling and calling and calling and calling. It'll just drive you nuts, and it's going to take you into a spiral down, and you'll never have a conclusion to this thing. So how do you find out more about us and how do you reach us? I can't make it any simpler than this. We got an 800 number. It's 844-775-5626. You can apply online right here. You can give us book a meeting. You just click this tab right up in here and it'll open up a calendar giving you all the days and times we have available that we can do a consultation one-on-one with you. If you want to just chat while you're on the site saying, hey, just want to kick the tires, want to ask some questions, you can do that right here. You can also ask those questions Thursday night. That is tonight at 7 p.m. Central Standard Time. I do a live event where I answer all your questions, and we do it again also on Tuesdays at 1 o'clock for those that can't do the evening events, or vice versa. So I do it Tuesday at 1 o'clock, 1 p.m. Central Standard Time, and I also do an event on Thursday nights at 7 p.m. to answer any and all questions. And the reason why is to inform you guys and make you a better consumer when it comes to real estate, especially your financing options. So thanks for watching. If you would, do me a huge favor, give us a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. God bless, guys. I'll see you later this afternoon with my live midday update. Take care. See you then. Bye-bye.